Welcome back. I'm Pratap here. Today is 13th September 2024. In this video, we are going to evaluate the performance of the high liquidity zones generated in our previous report. Before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training videos are available at our NeoStock YouTube channel. So at our channel homepage, you can find the tab posts, or some of you might be seeing the tab community. Whichever the tab you see, you click on the tab, then you will get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. I'm clicking on the link. Now we are into the playlist Supply Demand Zone Price Action course. So far we have completed 25 training lessons. From these 25 training lessons, we have 65 training videos are available. So you need to start your training from lesson 1. For that you need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. So from the video description, please join at our Telegram channel. It will be helpful to you. Each time when we release a new YouTube video or any other important updates, we will provide at our Telegram channel. Now let's get into the analysis of the high liquidity zones generated in the previous report. In the last report, yesterday's end of the day report, we have identified 6 high liquidity zones from daily time frame and 75 minutes time frame. So the first stock is Power Finance Corporation. This is a 75 minutes high liquidity supply zone. See here we have a ERC candle. This is a leg-in and then 2 base candles and then a drop candle. So this is the way a 75 minutes high liquidity zone is identified by our software. Okay, to find the trade, you need to fine tune this particular 75 minutes area with 15 minutes and then 5 minutes area. So first I'm changing the time frame to 15 minutes. In the 15 minutes, I have fine tuned 2 15-minute zones. This is the first one. We have a drop base, 2 base candles and a drop candle. This is the 15 minutes, but I have adjusted the 15 minutes exactly up to the 75 minutes high liquidity zone area. And also we have one more zone. This is the leg-in as an ERC candle. You have a base and drop, base, drop. This is another 15 minutes area. So both these 15 minutes areas again fine tuned with 5 minutes time frame. I'm changing the time frame to 5 minutes. Now here see for the first one. The first 15 fine tuned area. Inside again we identified a rally base drop. This is a 5 minutes fine tuned area. So this is the area where we are expecting a trade. In case if this is violated, we are expecting another trade in the rally base drop. This is another fine tuned 5 minutes area. And today we got a trade. So here morning 9:15 candle, price has reached and then it reached the immediate 15 minutes supply target zone. This is the 15 minutes target zone. Let me show you. We have a rally, 3 base candles. Actually leg candle, medium size leg is also part of the base. So rally, base, rally. See here morning 5 minutes it reached the entry and after that again it reached the target. Let me go to the 5 minutes, and even if you go to the 1 minute you get better clarity. First we got the trade and then prices came down and finally in the next candle it reached. That means within 10 minutes the trade is completed. If you go to the 1 minute, let's look into the 1 minute candle. So this is the morning 9:15 1 minute candle. It reached and then the fine tuned 5 minutes area, see how it pushed the prices. A strong rejection. That means in this area there is a very strong institutional order flow is there. and then morning 9:20 candle it reached the target. That means in 6 minutes the trade is completed. Within 6 minutes, how much profit we got? Let me open the Excel sheet. It has given 7,540 rupees, which is 4% ROI as per one futures margin cost. 4% ROI we got in just 6 minutes. But remember, getting a trade execution in 9:15 candle may not be easy every time. Sometimes your trades might be executed, sometimes before execution prices may come down. But generally you keep your order a little buffer before this, or maybe exactly at the digital line. Whatever it is, prices reached a little deep inside, not very deep, from the proximal line a little above it went. That means most of the time your order might have been executed. But if your order is executed, before you place your order, before you type your order, if it is executed and came down, you might have missed this trade. Or some of you might have kept pre-market orders in the cash segment. If that is the case, your order might have been executed. But whatever it is, some of you don't trade. For example, if you take me, I don't trade in 9:15 candle. From 9:16 onwards, I will place my orders. Or maybe in the almost closing hours of 9:15 candle, I will place my order. Because volatility is very high sometimes. But because of this volatility, sometimes we get a very huge profits in a short period. Either thing will happen. But anyway, our software has given an opportunity. Whether you utilized the opportunity or you missed the opportunity, that is a different case. But software point of view, it has done its job. It gave you a trade till the 15 minutes area. And look into the fine-tuned 5 minutes area within this. Why I am showing fine-tuned area, you will understand later. In this 15 minutes area, you have a rally, this is the fine-tuned 5 minutes area. See, prices went deep inside and then again started moving up. This fine-tuned 15, inside the fine-tuned area, the fine-tuned, why I am showing you this, there is a reason. I will talk about that reason a little later. But observe, the prices picked up the orders from the fine-tuned 5 minutes area. Again they moved until this fine-tuned 5 minutes area inside the high liquidity zone. Second time prices reached. Definitely we can take a second trade in this zone. The reason is the order flow is very strong because near to the proximal line it pushed the prices. A little above the proximal line, again trade will be executed. See, that is what happened in this candle. After that, prices came down. Even this 15 minutes target zone is also violated. Obviously, it will violate. The reason is earlier the order flow at the 15 minutes area, already prices went deep inside. There are higher chances that that 15 minutes target will be violated. That's why you should take a decision. What is the decision? Aiming for more profit. How you can aim for the more profit? You already learned the technique, trailing stop loss. I don't know how many of you remember the trailing stop loss example I have given in the Reliance. Reliance is the example I have given in the trailing stop loss lesson. I think if I am not wrong, it could be lesson 18 or lesson 19. Maybe lesson 19 if I am not wrong. So anyway, in 18 or 19, one of these lessons I have explained about trailing stop loss. So I gave you how you can target huge profits. I explained a technique that is a mix of multiple time frames. I gave you a Reliance example. I'm just shortly, in just 1 minute, let me tell you what I explained in Reliance example. In the Reliance daily zone, we got the trade. And we used one time frame below, that is 75 minutes trailing stop loss we used initially. Once the daily zone is created, we shifted to daily trailing stop loss. Until the daily zone is violated, we captured a huge profit in the Reliance. Exactly the same technique you can apply in this also. You can start with 1 minute, initially 1 minute. Why we need to aim for more? There are reasons. One is already we took one trade. Second trade, definitely you can aim for if there is an opportunity. And there are higher chances that this 15-minute zone will be violated. The reason is already order is consumed a little deep in the fine-tuned area. There are higher chances. I'm not saying 100% it will violate, but there are higher chances. In case they don't violate, suppose after prices going some more deep, let us assume it is started pushing up. At the time we miss our profitability. That's why we don't want to miss so much of profitability. That's why initially you want to use 1 minute trailing stop loss until a new 5 minutes trailing stop, you can use 1 minute trailing stop loss until a new 5 minute supply zone is created. After that, you can shift from 1 minute trailing stop loss to 5 minutes trailing stop loss. So that's why let me move on to the 1 minute zone. When you can implement this 1 minute trailing stop loss, once prices are reaching near to this, because you want to exit here, but you don't want to exit because you want to aim for a more profit. See, here you got the profit, and there is no 1 minute. Here you have a rally, base drop is there, follow through candles. So here prices came down, it picked up the orders from this zone, 1 minute area. Again drop, base drop is created, and then again drop, base drop is created exactly in this area. See, prices violated this fine-tuned 5 minute zone, further going down. So at the time 5 minute zone is also created. Let me shift to the 5 minutes time frame. See here, drop, 2 base candles and a drop. Now fix this 5 minute zone as a trailing stop loss. In case if this is violated, you exit. Or a new 5 minute zone is created, you can trail to the new 5 minute zone. And when is the new 5 minute zone is created? Here new 5 minute zone is created. Rally, base, drop. See this drop, base, drop. Whatever the 5 minute zone is there, you are using for your stop loss to book the profits. Now you trail that to the newly created. What is the trailing? Altering or changing. You are altering whatever the stop loss you set earlier. Now you are altered to the new stop loss. Now this is the rally, base, drop. If this is the one violated, again you can exit. But there should be an end point, right? So what is the end point? The end point is 75 minutes demand zone. Either trailing stop loss has to be violated, or at least prices should reach this 75 minute zone. Because expecting more profit beyond the 75 minute zone is meaningless in the intraday trading. Achieving 75 minutes target zone during intraday is a very great achievement. Expecting beyond that is not meaningful. So that's why this is the ultimate target. Drop, base, rally. See, this is your 75 minutes high liquidity zone. From this 75 minutes high liquidity zone till 75 minutes opposing side demand zone, if prices reaches, definitely you have to exit during the intraday. You can't expect beyond that. Previously also we have seen couple of examples in our earlier HLQ trades. This is not the first time prices reached the 75 minutes target zone during the intraday. Previously we have seen couple of examples. At the time also we depended on that trailing stop loss concept. Today also we are dependent on the trailing stop loss. How trailing stop loss provided more profit? This is a classic example. How we are grabbing. See, otherwise you would have exited here. Rather than you exited in the 15 minute zone. There is a strong logic why we executed. Because earlier prices went deep inside this zone earlier. They went to see, look into the wick, it went deep inside the fine-tuned area. There are higher chances this zone will be violated. There are higher chances. We are not saying 100% chances, we are saying higher chances. But there is a possibility that from here prices reach more deep below this, again it will reverse. That possibility is also there. That's why we are using trailing stop loss. Even 15 minutes trailing stop loss also you can use a drop base drop, and then again drop base drop, again drop base drop. After that it reached. Forget about 15, even 5 minutes is also today perfectly worked. Drop base drop, and then rally base drop, and then a rally base drop, and finally reached the 75 minutes demand zone. There you should exit. This is the way we would have got maximum profit. When we got the trade at 10:30, 5 minutes candle, it reached the entry, second entry we got. And then when it reached the target at 14 5 minutes, let us say 14 approximately. Here 10:30, 11:30, 12:30, 1:30, 14, 3.5 hours we are in the trade. You stayed in the trade for about 3.5 hours. After 3.5 hours, how much profit we got? 17,095 rupees profit. How much reward we got? ROI we got 9% ROI intraday. 9% profit we got as per our investment. What is our investment? One futures margin cost. The one future margin cost is something around 1,61,000 rupees. For 1,61,000 rupees investment, you got 17,095 rupees. Or roughly you can say 17,000 rupees you got profit, which is 9% ROI we got. So excellent profit. The concept that helped you is a trailing stop loss, what you learned in our training course. If you did not listen the Reliance example, what I explained in the trailing stop loss, please complete that explanation. It's a very powerful, that is a combination of multiple time frames. Once the higher time frame is created zone, the lower time frame you need to shift to higher time frame. See, 1 minute trailing stop loss we used initially. From 1 minute, once the 5 minute zone is created, we shifted from 1 minute to 5 minutes trailing stop loss. There onwards we continued with 5 minute zone. Same example I explained, but in the Reliance example, 75 minutes trailing stop loss initially we took. Once the daily zone is created, then we shifted from 75 to daily, and then we grabbed a huge amount of profit in the Reliance. We stayed in the trade for almost 1 month time. 1 month we continued the trade, and we captured a very good, almost 40 to 50% ROI we got in Reliance within a month period. How we got such a huge profit? Because of trailing stop loss. See, today intraday itself we got 9% ROI. In the recent time, volatility in the market is very low. Generally, we should get 6% ROI. Because of low volatility in the market in the recent month, we are getting only 3 to 4% ROI in most of the trades. But with the help of trailing stop loss, we achieved 9% ROI in this trade. Even if you miss the first trade, second trade, you would have achieved 9%. But what is required? Patience. Many people won't be having patience. After getting 4,000, 3,000 rupees profit, you want to exit from the trade. You are happy with that. But see, today we would have got 17,000 rupees profit. Sometimes we should control our emotions. You know what is the 17,000? It is equivalent to your 3 months of premium charges. You would have paid this money for next 3 months for taking the subscription. That much profit we got in just 1 day. This is what you should understand. Okay, this is about Power Finance Corporation. The next trade we got is a Nestle. I already posted in our Telegram group also. This is a daily high liquidity supply zone. The daily zone we have a rally, base, drop. Of course, this is also having daily demand zone also, drop, base, rally. And this daily supply zone we fine tuned with, because yesterday the stock is near to the daily supply zone. That's why today we got the trade. Rally based drop. This is what identified by our software. This we fine tuned with 75 minutes time frame. Sorry, I didn't fine tune with 75 minutes time frame. This is an aggressive trade. Yesterday when I find, even here also, even daily demand zone also I fine tuned yesterday. Here also there is no 75 minute zone. Here also an aggressive trade. Aggressive trade because of these rejections. Initially when I looked into this, I didn't find any zone, proper zone. Maybe you can draw a zone like this. See this with the hidden body, this is like a rally candle. If you add the hidden body, rally 1, 2, 3, 4 base candles and drop candle, that means the entire daily zone and 75 minute zones are equal. If you draw, see the whole zone you have to draw 75 minute zone. But somehow I am not comfortable with this. We can do that actually, but somehow, this price action immediately made me, because prices came near to this area and came down. Then I got some kind of clue in my mind. When I didn't find proper 75 minute zone here, the reason why I am not convinced is I felt this candle is like a ERC candle, failed ERC candle. This is another ERC. See, length of both the candles are almost same. In between there are no base candles. That's why I didn't convince to draw this entire zone as a 75 minute zone. But what I felt is there is some strong order flow, because I am seeing the rejection. Prices reached here. After that, see huge rejection from here to here. So that's why what I did, I went to the 15 minutes time frame. There I have seen a 15 minute zone. Rally base drop, and also there is some hidden body is also there. Drop base drop, and also you can consider a pro gap and see the rejections near to the zone. Prices are not going beyond this. And then I went to the 5 minutes time frame. There I identified an excellent fine tuned 5 minute zone. So this is the ERC candle I consider as a leg-in, 2 base candles and a drop candle, and then a follow through candles. And this fine tuned area, today we got the trade. So earlier prices came and came down. This is the price action clue, rejection. See today what happened? Prices went near to this. Definitely we need to add some entry buffer. The reason is earlier reactions, the prices were getting reacted before entering into this zone, fine tuned. See today also same thing happened just before reaching, just 1 minute before. See this is a 2505 stock. What is the previous high of this stock? 561.60, and today it went up to 561. The high of this candle is 561. 2561, and entry is 2560. Definitely you would have kept 1 or 2 rupees entry buffer here. So from the entry buffer, stop buffer together, we looked into this 15, because here we have a 15 minutes zone. See here, rally base rally. This is the 15 minute zone. Till here we have 4.5 RR is there, excellent RR. So you would have got a trade in this at 10 o'clock 5 minutes and reached the target at 12 o'clock 40 minutes. Maybe around 2.5 hours the trade is completed. And how much profit it has given? 4,110 rupees. And what is the ROI? 4.6% ROI. The reason is the future cost of this is around 80,000 rupees. 80 or 85,000. I didn't remember exactly. I think around 85,000 or 86,000. That's why you got 4.6, even the profit. Generally, you will be having a 1,70,000, 1,80,000, 1,60,000 lot sizes, many stocks. Few stocks around 2 lakhs will be there. Maybe you would have brought 2 lots with that same investment today. If you would have brought you might have got 8,200 rupees profit you would have got. But I am calculating based on 1 lot. So that's why I don't think it is a small amount. It is 4.6% ROI. So very good. Maybe it is less than our 6% average ROI, but still, this month the volatility is not really great. Many times we are getting around 4 to 4.5% ROI only we are getting during this month. Now slowly market volatility is increasing. So in the last few days we are seeing, still few stocks we got, this one we got only 2.3% ROI. Here 7%. Slowly it is getting improved. Maybe by end of this month probably volatility in the market will improve. Then we get more ROIs during the intraday trades. So this is the way Nestle has given 4.6% ROI as per one futures margin cost. And next one is IRCTC. IRCTC is also having fine-tuned zones. Today prices went and the zones are violated. And one zone, actually we have a very good zone, but it is violated, but we can't take a trade in that zone. Why we can't take a trade in that zone? What is the reason? That I will explain in IRCTC. Please concentrate. IRCTC is also a daily high liquidity supply zone. This is the one. So, sorry, not daily, 75 minutes. This is a 75 minutes high liquidity supply zone. We have a drop. We have a rally, 3 base candles and a drop candle. This is a medium size leg, part of the base only. This is how our software identified this zone. This one I fine-tuned with 15 minutes time frame. In the 15 minutes area, I identified 2 15-minute zones. Here I have a rally candle as a ERC candle. This is a failed ERC, then base and drop. Another one, again this is the one. We have a rally, 3 base candles and a drop candle. So 2 15-minute zones. Again fine-tuned with 5 minutes time frame. See here, drop, 2 base candles and a drop with pro gap. And also see prices came very near to this zone and started coming down. That means there is a very strong institutional order flow in this area. If prices reach, definitely we can take a trade. This is going to be a successful trade because of strong price action clue rejections from near to this zone. And there is one more rally, 4 base candles and a drop. And we can't plan a trade in this fine-tuned zone because it is already tested. The prices came down and again they went up and picked up the order and then again it came down. It has given a good return from this fine-tuned 5-minute zone. Because it is a tested zone, we can't take a risk to take another trade in this zone. So this chance is ruled out. But this one is very good. We have very good. First of all, this is a fine-tuned 5-minute zone. And it is having a pro gap. And prices enter into the pro gap. And pro gap, each time prices are entering into the pro gap, see how the prices are coming down. Again prices second time entered into the pro gap. Again prices came down. So that's why this time when prices entered into the fine-tuned area, we want to take a trade. See even third time, see here. Third time further came near to the zone. Again it pushed the prices down. So that is the reason why today definitely we don't want to miss this zone. But why we didn't take a trade today? The reason is market opened with a gap up. When market is opened with a gap up, before you place order in this zone, this entire zone has already violated. So you can't place your order anymore. Because in the market pre-open itself, your price started from here. In the pre-market, when the prices opened here, definitely this zone is violated before the trading starts. Then you can't keep this zone because it is an invalid zone. By the time you want to place a trade, by the time you want to place a trade or you want to place your order for this trade, before placing your order, this zone become invalid. Why it is invalid? Because pre-market itself it is opened above this zone. That means the zone is violated before placing our order itself. That's why we can't place a trade here. If it is a 9-15 minutes candle opened and violated, probably this is a stopped out trade. But before you place your order itself in the pre-market open itself, it is above the zone, so you can't place your order. Then you can place your order in this area, but we cannot, because we already decided this is a tested zone. We can't plan any trade, so easily it is violated. After that, entire high liquidity zone is violated without placing any of our orders. So that's why these orders are invalid orders. We can't place. So that means none of our trades are stopped out in this regard. If anybody kept GTT orders in the cash segment, it is a big problem. Always intraday trades, we advise until market opens, you cannot place your intraday orders. It is a thumb rule. You may place short-term income trades or weekly income trade or monthly income trade. Maybe you can place your pre-market orders. But intraday orders, until the market open, you cannot place the order. In the cash segment, you can place the order once the pre-market open itself above this. Once pre-market is opened, then you can place during that 15 minutes gap period, you can place your intraday cash segment orders. Once the pre-market is started. That is in cash segment. Future segment, definitely you have to place your order after 9:15. Once 9:15, from 9:15:00 seconds onwards, you can place orders in the future segment for the intraday point of view. That's why intraday always people advise place your orders only after the market starts. Don't place any ZTT orders for your intraday trades. This is one point everybody should remember. Because intraday, our zones are near to our prices are near to the zones, demand zone or supply zone. When they are near, any with gap up opened, your order has to be violated. Stop loss won't hit. You will miss there is a slippage of the stop loss execution. Because of all these reasons, nobody will keep orders in intraday until market opens. Okay, that's why IRCTC, even though zone is violated, this order we didn't place, this anyway we didn't plan the trade. And remaining zones, they didn't execute, they didn't give any trade. ABB is a daily high liquidity demand zone. Prices didn't enter into the fine-tuned area. This is a ERC candle, then base candle. What is that? Something wrong. Rally base, rally ABB. This is 75 minutes zone. Something wrong. It is supposed to be a daily zone. Okay, this is fine-tuned with any 75 minutes zone. This is a drop base rally. I think ABB, I made some mistake. This is a 75 minute zone, not daily zone. ABB is looking like a, I'm wondering whether I made any mistake. Anyway, some confusion in ABB already we discussed earlier. I think this is the 75 minute zone. The daily zone, did I not? Okay, I think the daily, this is a ABB is a daily zone. I didn't fine tune. If it is a daily zone, where is the daily zone? Then drop base rally could be the daily zone, or rally these two base candles and rally. Actually what I did earlier, this is the 75-minute zone we fine-tuned. I have seen this fine-tuned area in the chart. I was thinking it is a daily zone. I did not even looked into the analysis, simply added into the playlist. I was just observing this stock. Actually here we have a rally base rally, if this is the high liquidity zone. Then I should have drawn the zone like this. This could be daily demand zone, but lighter color I am giving, so weekly demand zone color I am giving. So this is actually a daily demand zone. Let us assume rally base rally. If this is the high liquidity zone identified by our software. Sorry for my mistake. Previously we have a 75-minute zone, ABB, listed by our NeoStock software. At the time I fine-tuned this. Whatever I fine-tuned, I just kept as it is, because once it is fine-tuned, it is a valid analysis. So that's why I kept this, and I was waiting for orders in the immediately available zones. Previously we got a trade also from here. But this should be fine-tuned with 75 minutes time frame. So here we have drop 1, 2, 3, 4, 5 base. This is the one we can fine-tune with 75 minutes demand zone. This is the 75 minutes demand zone. And again we have drop base rally. This is also LOTL. This also we can draw. One more. This is 75, another 75, LOTL. This we should fine tune with 15-minute zone. So here drop base rally is there. Lowest of this candle. This is the 15 minutes demand zone. It already picked up the orders and moved with and this should be again fine tuned with 5 minutes time frame. So here we have a fine tuned 5-minute zone. Rally base rally. And this is already tested. Rally base rally. After that, see the huge movement. And any other 75-minute zones we missed within this area? Yeah, there is another 75 drop base rally. Within this area, any 15-minute zones, let us identify. We have a drop, 2 base candles and a rally candle. So this is the way you can draw the 15-minute zone. This is the 15 minutes demand zone. Within this 15 minutes demand zone, this is the rally with hidden body. At the hidden body, this is going to be a high explosive candle. Now within this, are there any 5-minute zones? We have a rally base rally. Wick to wick. See, again you can add the hidden body here. That way you can draw even one more zone also here. Wick to wick I am drawing, but risk management point of view, later on you may reduce. See, this is a hidden body. If you add the hidden body hues, and also pro gap is there in this area. You can also draw a zone like this to minimize the risk. But here we have a pro gap. There are higher chances prices enter and again they move up. That possibility is there. If risk is high, you would draw the zone like this. And here also, if the risk is high, you will draw the zone like this. But anyway, today prices didn't enter into these fine-tuned areas. Sorry for my mistake, I think I overlooked. Earlier I thought this 75 is a daily zone and I just ignored it. But actually ABB is a daily high liquidity zone. I was still looking into the 75-minute zone. Lot of order flows are there in this. Anyway, this is a drop base rally. I have to check the maybe rally base, 2 base candles rally or drop base rally. It doesn't make any difference. Even if it is a drop base rally, also still the same zone, because lowest wick of the leg candle. If it is rally base rally, anyway both these candles we verified. How software identified, I need to check. And next one is Balrampur Chini. This is a daily high liquidity supply zone. This is the ERC candle. 1, 2, 3, 4 base candles and a drop candle. This is what our software identified. This one I fine-tuned with 75 minutes. Drop base drop. This is the ERC candle. Leg in. Failed ERC candle as a leg in, base and drop. This is the 75-minute zone. This 75-minute zone I didn't further fine-tune. The reason is 15-minute structure is not good. So look into the 15-minute structure, a very bad structure. I know this zone will be violated easily. So that is the reason why we didn't plan any trade. But what I have seen is some rejections I have seen from this area. So I went to the 5 minutes time frame actually. So at the 5 minutes time frame, we have this rally base. This is also should be considered as a base candle. This is the way you can plan the aggressive trade you can plan here. Why aggressive trade? Prices came near to this zone and came down. Again, prices came and they came down. This is the only one option you have for planning the trade. Price action clue, rejections near the zone. And India Mart already we have discussed. But the only thing is the zone is not violated here. It has to be violated. This is already fine-tuned area is pierced. Pierced zone is not valid anymore. So you can't see today you may see there is a fine-tuned 15-minute zone, a newly created rally base drop. But you cannot draw this zone because it is already a pierced zone, 75. So that's why let us delete. If any 75-minute zone is created first, then you can consider. Is there any 75-minute zone creation? No. This is a rally, this is a base candle, but this is not a valid leg out. This is a medium size candle. So that's why I cannot consider rally base drop. To further fine tune in this area, this is not a valid. Leg out is not really great. If you want to compromise and if you want to draw this zone, that is possible. So at the time you can draw a zone like this, the 75-minute zone, if you want to compromise and draw. Sometimes you can do that, compromising in the higher time frames, so that you can identify lower time frame order flow. At the time lower time frames you cannot compromise and draw the zones. They should be very clean and neat. So this is a 75-minute zone, but leg out you compromised. So within this area, is there any 15-minute zone? Yes, there is a rally base drop. Very good, excellent. This is a 15-minute supply zone. Inside 15 minutes, now you can draw 5-minute zone. Look into the 5 minutes. Here you have a rally, you have a base, in between there is no base candle. But if you, this is a drop, two base candle, this is a medium size candle, this is also part of the zone. That way you can draw the zone like this. This is a drop candle, two base candles, this is a medium size candle. That's earlier base candles are there. That's why this is part of the base. But leg out is excellent, and good follow through candle is also there. Maybe that way you can consider. But anyway, prices didn't reach. Next one is, and you are able to achieve because you compromise it for 75 minute zone. The leg out, okay. It is a medium size. Some more is there. It could have been qualified as a explosive leg out candle or large size leg out candle. Just compromised and draw. Okay, Nestle, IRCTC, PFC we already discussed. So this is about the high liquidity zones identified in the previous report. And we got 3 trades. One is from Nestle and 2 are from PFC. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.